So how do you get the most out of Trading 2 and 2? It is a brilliant app, but for newbies and experienced people on it as well, it can be quite complicated and there's a lot of things to go through. So let's go over some hints and tips and tricks and all that sort of good stuff to make sure that you're getting the most out of it and you're getting the best possible returns that you can whilst reducing the fees as much as possible as well. So first of all, Trading 2 and 2, established in 2004, it is FCA accredited. So you've got Financial Conduct Authority, making sure that they're keeping an eye on them. And you've also got FSCS protection. So FSCS protection basically means that £85,000 worth of cash that you hold within there is protected up to that value. Now, the vast majority of people might not hold that much cash within their Trading 2 and 2 account. They do have a good interest rate, which we'll cover in a bit, but the majority of people are going to use it for investments. Now, investments are protected separately in the UK. So the £85,000 is for cash specifically. Investments are protected under the CAS rules, CASS. What this basically does is accredited brokers in the UK have to make sure that they hold your investments outside of the business. So if Trading 2 and 2 was to come under any bother, any financial difficulties, to fold, to go bankrupt, whatever it may be, your investments will be held separately from Trading 2 and 2, so you will get them back. So there will be some admin probably required in order to do that. But worst case scenario, Trading 2 and 2 goes bust. Your investments are protected outside of their accounts. You're going to get them back. Right, let's get into the app and have a look at some of the things that we're going to go over. First of all, accounts. If you'll notice at the top, we've got a number of different accounts, 4 different accounts. You've got the Invest account, which is not tax protected. So you can use the Invest account, for example, if you've maxed out your ISA, or if you're not in the UK, the Invest account is going to be where you're going to need to be putting your cash. You are not protected from tax on any of the gains or dividends that you receive, and depending upon your circumstances and how much you earn and all that sort of good stuff, you might need to fill out a self-assessment form when you come to sell them. So only when you come to sell your investments. In the UK, that's how it works. In places like Ireland, you have to pay capital gains tax every 8 years. It's a bloody nightmare and they don't have ISAs. But an Invest account in the UK means that when you come to sell, if you've got a significant gain in there, that's the year then that you're going to have to pay the tax. So you could hold it for a number of years and not have to do a self-assessment, 10, 20 years. But when you come to sell, that's when you're going to have to do it. So Invest account is good for those reasons, but really we're not going to be wanting to be using it if we're starting out, if we've got less than £20,000 per year to put in. The next one then that we're going to go over, we'll go to the bottom, is the cash ISA. So again, you can put £20,000 into the cash ISA. You can see I've not got anything in here at the moment, but what you can see is I've used £4,500 because you can put up to £20,000 across a mix of the cash ISA and the stocks and shares ISA. You don't have to put all 20k into one. You can mix and match them. And that box in the middle is going to tell you how much you've got left at any given time. It's really useful to know. It is your responsibility if you open another account with another broker that you don't go over that £20,000 limit. So you are allowed as of this year to have a number of different brokers, but you need to manage making sure that your deposits don't go above £20,000. The rate of interest within the cash ISA at the moment for Trading 2 and 2 is 4.6%, which is really pretty good. It's very competitive in the market at the moment. And if you are risk averse, perhaps it's a good way to be putting some money away. Or if your time horizon is shorter, less than 5 years, for example, or you're saving for a big purchase, a car, a house, a holiday, perhaps use a cash ISA because there's no guarantees in the market. The less time you have money in there, the more risky it is. Then we've got the CFD account. Right, the CFD stands for Contract for Difference, and basically, we're not going to go into any detail here, but as far as I'm concerned, it's a type of gambling. Over 90% of people, I think, lose money doing CFDs, and it is really risky. I don't even touch them. As you can see, I've not got a penny in here, and I don't think I ever will. I do sometimes get, as you can see, my account is open. I do sometimes get comments from people because to open a CFD account you have to answer a whole load of questions because it is Trading 2 and 2's obligation to make sure that they're not putting at-risk people having access to these accounts. So you have to go through a whole load of questionnaires, answer a whole load of financial questions. I get DMs from people saying, can you tell me what the answer to this is? And my response every time is, if you don't know what the answer is, you really should not be opening it. So that's the CFD. Next, we have then stocks and shares ISA. So the stocks and shares ISA, just like the cash ISA, allows you to put £20,000 per year into it, and any of the gains are completely tax-free. Now, people sometimes get this wrong. The limit is on deposits. So you can put £20,000 in, that could grow to £1 million. It doesn't matter. It doesn't matter what it grows to. That is then tax-free. You can buy and sell as many times as you want within this account. If you put £20,000 in, it goes up to £22,000. You sell £4,000, you're down to £18,000. You can then buy £4,000 of something else. That doesn't take you over the £20,000 threshold. The limit is on deposits only. So we have to be completely clear on that, because I get a hell of a lot of people that aren't entirely sure on how that works. Now, another thing that you can get from trading 2 and 2 is a card, a debit card. So you can only get that through the Invest account. So if you go into your Invest account and you click on that button at the bottom that looks like a card, you can see that I've already got one. You get that, you can get it sent through the post, you can get a virtual one instead, and you will get some benefits as a result of doing that. So if you hold cash within trading 2 and 2, maybe you've got some spending money within there that you just want to hold in your Invest account, you're going to get a 4.6% interest rate on that at the moment. That could change based on Bank of England rates, but you're also going to get 0.5% on cash back. So any purchases that you make, you're going to get 0.5% back as a result. It is a really good facility. You have to bear in mind that there is a cost in order to get the physical card. I think it's about £5. So to get it posted out to you and printed. So if you want that, you'll have to pay that, but it's a great thing to have. Right, fees. From a fees perspective, there are no platform fees on trading 2 and 2. There's not very many platforms in the UK that actually are free. From a platform fee specific perspective, it's a lot of S's and stuff. So what does that actually mean? It means that you don't pay trading 2 and 2 to hold your investments within there. You don't have any buying and selling fees. So for example, in Hargreaves Lansdown, if you wanted to buy an individual stock, it's going to cost you £11.95, which is a hell of a lot of money. If you want to sell it, it's going to cost you the same again. There is no transactional fees. There are no platform fees. Now, ETF fees still apply. You can't get away from that. An ETF is an exchange traded fund. It's a fund. So if you wanted to buy the S&P 500, for example, and you wanted to buy the one that I hold, the Invesco one, you are going to pay 0.15% of your total investment, of your total pot within that fund as a fee. Now, it will happen in the background. There's no admin required. They will take it out. You don't need to worry about it. But there is no getting away from that, whichever platform you choose. Another fee to bear in mind is stamp duty. So stamp duty is 0.5% in the UK. So if you're buying a UK listed business, you're going to pay 0.5%. Again, it happens in the background. You don't need to worry about it. If you buy a US listed business, you're going to pay withholding tax, which is 0.3% of your investments. Now, the way to get around that is to fill out a W8BEN form. When you sign up to trading 2 and 2, they will give you access to this, and every year they will tell you to try and sign it again. Basically, it's an agreement between the UK and the US that halves that withholding tax fee. So the withholding tax is 0.3, it comes down to 0.15%. Now that's on the dividends that you receive from US businesses. So it's well worth signing that just to make sure that you're reducing your fees again. Right, we'll go back to the ISER and I'll show you a few bits and bobs. So in the ISER, you can see here, click on the pie at the bottom. That basically shows all of your investments. You can see 1 day, 1 week, 1 month, 3 months, 1 year max. So you can toggle between those and it shows your return in that given time period. So 1 day, I'm down 0.1%. Over a week, I'm up 1.9%. Over a month, I'm down 1.3. 3 months, this one's going to hurt. I'm down 9.1%. And over the course of the last year, I'm up 7.6%. When we look at the max view, it's always important. Zoom out. If in doubt, I'm up 34% nearly. Then when you look down at your investments, you can see all of your investments here. Someone on YouTube told me about this the other day. Can't remember the name, but if you're watching this, thank you for the tip. See those little 3 lines descending in width on the right-hand side next to the magnifying glass? If you click on that, you can change the order. So at the moment, I've got the value. So when we look at it, the highest value investments is at the top. For me, of course, Invesco All World. If you wanted to change it to the gain versus the loss, you can click that and it will show at the top which is the highest gain investment you've got all the way down to the bottom. You can see obviously that I've got a fair few in the red, and that's because I'm always transparent about my portfolio, nothing to hide here. You can change it to name, order, value, investment date, whatever it may be. You can have her play around and mess around with how you want to see it. Another thing you can do is you see this cog on the right hand side here, you can click on that just below next to where it says max, and you can show the net deposits. So that shows that how much deposits you've put into the account. You can turn that on or off depending upon your preference. By the way, this is not in any way sponsored content. I've not been paid to talk about this sort of stuff. So I do have an affiliate link, which means I'll get a kickback if you use my link, but this is not a sponsored video. So I am going to go over some of the negatives as well. Now with that in mind as well, if you haven't already opened a Trading 2 and 2 account, if you use the link in my description, in my bio, you will get a free fractional share as a result of doing so. Now don't forget your capital's at risk and terms and conditions apply. You can also use promo code Neil. Let me show you how to do that. So on the bottom right hand corner again, the 3 lines, click on that, scroll down to where it says use promo code, and you just type in NEIL and then click on apply code. If you've also opened an account in the last 10 days, you'll still get access to that free fractional share. It's typically worth anywhere between £10 and £100. It's a great way of getting started. Next up, let's look at how to deposit some cash, because there are some specifics on this we need to be careful of. So again, click on the 3 lines in the bottom right hand corner and you can then click on deposit funds. You've got a number of different options here. You'll notice at the bottom, if you want to do card or if you want to do Apple Pay, you can only do up to £2,000 before you start having to pay a 0.7% fee. It's a bit of a pain in the hoop. So you don't want to have to do that. So instant bank transfer is what I do, and it will link directly to your bank. Again, some people are concerned about this. But again, this is an accredited large establishment. This is how a lot of businesses take money now. You click on that, you choose which is your bank that you hold. It will link to that. You decide how much you want to transfer and it will transfer across. Now here's the bad thing about trading 2 and 2. Trying to set up auto deposits. It is a pain in the arse. You can't do it through that facility. The only way to do it is to set up a standing order, and that's not easy for most people. So what you have to do is go to the home screen again on the Pi, click on cash. You see it? Click on cash there. Right, that is all of the details in terms of trading 2 and 2's account. So if you want to set up a standing order, you need to go into your bank. You need to set up this with these details, that specific code that you're going to get, and set up a standing order that way. This is something that I do think that they need to improve on. It is a lot better in other brokers, and it's a bit of a pain. At the end of the day, we're trying to set up regular, consistent deposits and to put a bit of a barrier in place in order to try and do that. What I do at the moment is on a monthly basis, I deposit in manually using the instant bank transfer thing. But that in a way, again, is a bit of a barrier because you need to remember to do it. It's not like your pension, which automatically comes out. So it's a bit of a hassle. So within an ISER as well, you can activate the interest on cash. So how do you do that? Again, 3 lines in the bottom right hand corner and click on the button here, interest on cash. See it there? Click on that, then go down. We can see that we're currently getting paid 4.6%, which can be variable based on the Bank of England, as I said, and you need to click on enable. So we'll do that, enable, turn it on, click on the terms and conditions, make sure you've read them, because this goes into QMMFs. MMMFs are money market funds. So it's not the same as putting your money into a bank. It is almost as safe. There is risk associated with it. However, it's almost like UK bonds basically, but there is not as safe as cash. So make sure you research if you are prepared to do it. Click enable, job done, interest on cash enabled. Right, one of the best features and the limiting part of trading 2 and 2 is the pies as well. So let's have a look at that. So click on the pie feature again, which is the second one from the left. Come down and you'll see there new pie. So we click on that and then you've got a number of different options. Right, we've got model, we've got social, we've got custom. Model is, it's modeling against some of the biggest funds in the world. So the top one there is Vanguard Global, for example. And you can see at the moment it's got a 50-50 weighting between bonds and equity. So when we click on that, we can change that. So if you're more conservative and you click on conservative, it's going to change it so that it's a much heavier weighting to bonds, 80% into bonds and 20% into stocks. So bonds are more secure through times of volatility, which we're in at the moment, but the gains in the longer term are worse. But your risk appetite might be much lower, so that's a good option if it is. Now, if your risk appetite is moderate, click on that. If it's assertive or if it's aggressive, click on that, and that will change it to 90% equity, stocks, 10% bonds. Also have a look at the TER. What does that stand for? Total expense ratio. So that's the fee that's going to be associated with investing into that. So there's a number of different options. You can scan through those and have a look. Social is all of the people on trading 2 and 2 that have their pies on there listed from the most copied and followed all the way down to the least. I do have one on here. I've always caveated with this. This is just an example of a pie of what I would set up in 2025. You should not blindly copy my pie, anyone else's pie, without doing any research. My pie was created to show people of what it would look like if I was starting today and the sort of allocations that I will put in place. So do not blindly copy any of these pies. None of these people are professionals. I'm not a professional. I'm not a financial advisor. I cannot tell you what to invest into. And then the last option is custom, where you can build your own pie. Click on custom, click on add instruments. You can then decide what you want to put in there. You can search for it, or you can just click on the ones that are there. You click add to pie, it goes in. You come back out, you click on Microsoft, add to pie, it goes in. You put as many as you want in here. Next step is you then work out what is the allocation into each. So NVIDIA, we want to put 70% and we want to do 30% into Microsoft. You can put ETFs in here as well, by the way. It's a bit fiddly to try and get the exact number. That's one of the things I'll say. Now, this is another problem that I have with trading 2 and 2. Average annual return says 20%. Now, some people might think, well, I'm going to get 20%. per year now as a result of that. But that's taking into consideration the ridiculous gains that Nvidia have had over the last few years. There is no guarantee that that's going to continue at that rate. So I don't like that. I don't like that bit. So make sure you're aware of that when you're choosing your own pies. It is not a guarantee of future returns. In terms of investment products, Trading 2 and 2 have got 3,000 ETFs to choose from, and they've got thousands of different business. And this is another problem that I have then. So it's too much. There's too much to choose from. Nobody needs that many options, and probably you're going to get concerned about what the options, trying to choose the right one, etc. And for some people, that's why Vanguard as a platform's best. They've only got 86 funds, and they can be changed and manipulated to your target retirement date. They're very specific in what they do. So I get why they're doing it, because they're giving you as many options as you possibly could have, but it's not right for me. The other thing is they've got thousands of individual stocks that you can invest into. Again, I don't know whether that promotes sensible long-term investing. There is a little bit of information that you can get on each individual business. So we'll click on Microsoft, for example, and you can scan down. You can see the performance, of course. You can toggle between the times again. There is news here, so anything that's come out recently. So Microsoft have recently had a good earnings report, which is why they've gone up. You see that big peak there? That's because of the earnings report. There'll be some news on that, and you can scan all across that to get any of the info. What pie holds this investment? Which of the social pies hold all of it? We can see then in terms of the performance, the market cap, how much money they're making, what's the PE ratio. We're not going to go into that here, but we can cover that at a different time. What's the dividend yield, and a whole raft of other different pieces of information. I always find personally that I get much better information outside of Trading 2 and 2. It is good, it's a good start point, but you want to use the likes of Stockopedia, for example. Now that is a paid subscription. If you want detailed information, I'll put a link to that below. Stockopedia is a great place of getting really detailed information of all the analytics of businesses, updated on a very regular basis, and much more, I would say, reliable than just using the likes of Trading 2 and 2. Now, in terms of buying a position, it's really straightforward. We'll go back into, well, we'll use Lloyd's just as an example. You go into the investment that you want. You can search for it in the magnifying glass again. Type it into the search bar, whatever it may be that you're after. Or we'll just use this as an example. We're going to use the Lloyd's Bank that I've already got. Click into it, and basically you just click buy. You decide, I've got no cash in here at the moment, how much you want to invest. You can toggle left or right with that, or you can click the little calculator looking thing on the right, and you can decide how much you want to put in. It's very straightforward, £800. And if you don't have enough, you can deposit some cash. So if I click review order, deposit funds. So it gives you the prompt in order to put the cash back in. There is also a desktop version of this available. I think the vast majority of people are probably going to be using the mobile version, but there's a desktop version as well if you want to use that. And let's quickly go over some of the bad things then, because I want to be completely transparent on this. So first of all, it is too easy. It's too good almost. It kind of promotes not long-term investing, buying and selling, getting in, getting out, worrying about the hype, which is absolutely not my sort of approach. And it's not something that I would advocate for new investors or longer investors. The longer you do this sort of stuff, you'll see it with a lot of creators, the longer you do it, the simpler you try and end up keeping it. We're not going to find the next Microsoft. If we do, we've got very lucky. 95% of people across the world will underperform the market by trying to pick individual businesses, and they kind of promote the allowance to be able to do that. My approach is 90% into ETFs, 10% into individual businesses. When they do well, sell them out and buy into the ETF. If they do bad, get rid of them as well. Second thing I don't like is the name, Trading 2 and 2. I wonder if they regret it somewhat, because a lot of people that use this app are doing so for the long term, which is the right approach as far as I'm concerned. And the name kind of might put people off. It might make it sound more complicated than it is, and it also might promote, again, trading rather than long-term investing. The standing order piece is a bit of a pain in the hoop as well, so we've gone over that. I don't like that. And then the last one is the pies, whilst they're also great, when you've got dividends within there. If you've got 4 businesses, and you've got 4 dividend businesses, some of them have a 5% yield, some of them have a 1% yield. When you get paid the dividend, it will go in to that pie, and that dividend will get split up and repaid across all of those businesses. And I don't like the way that it does that. That's why I don't use pies. I don't use individual pies, because I like to get the dividend from a given business, Lloyd's, for example, again. I like to receive that, and I like to invest the entirety of that back into Lloyd's. Right, so there's a quick overview in terms of the ins and outs of Trading 2 and 2. If you've got any questions, if I've missed anything, or if there's anything that you don't think is quite right, let me know. If you want to have a look over my entire portfolio, click on this link here, and don't forget that free fractional share if you haven't already started. Thanks for watching.